Today, I want to talk about how UBS could be about to collapse as a result of taking on Credit Suisse's toxic swap portfolio. The CEO of UBS said on Wednesday that UBS would need a private buyer in case of a rescue. I want to explain what happened to Credit Suisse, what UBS has taken on, and why they're now in trouble. So stay tuned and let's make some money. And now I'll dive straight in with the key information. So, you can see from this article, it says the UBS CEO says a private buyer is the preferred outcome in case of a rescue. Now you might be thinking, hang on Tom, private buyer, rescue, UBS? I thought UBS was a solid bank. What actually happened to UBS? And what have they acquired from Credit Suisse? Well, back in 2022, Archegos was a family office doing some business with Credit Suisse. Archegos was using very risky total return swaps. So total return swaps allow an entity or a hedge fund to have direct exposure to a stock through an indirect product, which is a complex derivative. Basically, they could have all the exposure to stocks like GameStop, AMC and others without having to report their short interest. They then went to other banks to do the same deal and ended up with some stocks like Paramount or CBS, for example, where they held over 100% of the flow. After a while, these toxic swap derivatives ended up backfiring on them on their long positions and on their short positions too. Many of those stocks that were massively overinflated because they'd gone irresponsibly long then crashed 80 or 90%. In the meantime, a number of banks like Credit Suisse, Nomura and Goldman Sachs ended up taking on billions of dollars in losses. But it's likely that not all of their positions ended up being closed out of, and therefore Credit Suisse effectively inherited these toxic swap positions from Archegos. As Peruvian Bull tweeted, he said Archegos failed due to these toxic equity total return swaps. Credit Suisse took the Archegos hit, but months later they went under as well and were bought by UBS. But UBS is now saying they want a private buyer in case of a crisis. So what's this hot potato that keeps blowing up all of these big banks? Let's not forget, Credit Suisse wasn't a small child's play bank managing a few $1 million. They were one of the largest European banks out there. They ended up failing, and now UBS is struggling as well, wanting a private buyer in case of a crisis or in need of a rescue. The UBS CEO said even in the unlikely event of something going wrong at UBS, we probably have enough cushion before even speaking about a resolution of the bank, and it's a very unlikely risk of a loss for the taxpayer. But if UBS did need to be rescued, a private buyer would be preferable instead of having taxpayer bailouts. But you may ask, why have UBS all of a sudden changed their mind and are now talking about a rescue? Well, Just Dario has answered just that. He said, here it is. 2 weeks ago, UBS ended their $9 billion loss protection and the $100 billion liquidity backstop agreements in place with the Swiss government. The Credit Suisse arm that still remains even repaid the $50 billion borrowed from the Swiss National Bank during the emergency. So now UBS all of a sudden don't have the protection from the Swiss National Bank and the Swiss government. They're effectively now off on their own with whatever risk remains. The reason why they've now forgone that loss protection and liquidity backstop is because the Swiss government now thinks everything is okay and is taking back those privileges. The reason why they did that is to alleviate pressure from those taxpayers who are now happy they don't have to potentially backstop UBS as well as backstopping Credit Suisse. Saying no wonder the Swiss government was quickly and cheerfully sharing the news with the press, declaring how Swiss taxpayers will now be free from any risk relating to Credit Suisse. Unless, of course, UBS blows up pretty shortly and all of a sudden the Swiss government gets back involved to backstop them as well, or tries to find a private buyer. I also wanted to quickly remind you of the Thanksgiving sale we have at the Millionaire Mindset Trading Group. For the next 7 days, or for the last week of November, you can currently get 5 weeks of membership for the price of 4. If you sign up in the next 7 days when you get rebilled in December, I'll refund that December billing so you get 5 weeks for the price of 4, or get this last week of November entirely for free. I also wanted to give a massive shout out to JJ, who literally joined the Millionaire Mindset Trading Group yesterday and is already making profits. He started a small position in today's fast-moving momentum news play, which was SPRC, and made about 10% profit in around 30 seconds. So if you guys want to be making hundreds of dollars in 30 seconds, be sure to join the Millionaire Mindset Trading Group, linked in the description below. Now you might be saying, Tom, how did Archegos on their own cause not just Credit Suisse to explode, but potentially UBS to explode as well? Surely it couldn't just have been Archegos that caused all of that damage. But as Just Dario also points out, he said, now tell me one thing. What are the chances that Archegos was an isolated case in Credit Suisse's books? Zero, of course. No need to say more. It's likely Archegos wasn't just the only one singular hedge fund in the entire world that knew what a total return swap was. And it's likely they weren't the only hedge fund in the entire world that was abusing the powers of a total return swap. And therefore it's likely these toxic derivatives that are still in Credit Suisse or are now still in UBS aren't just related to Archegos, they're likely related to a number of other hedge funds as well. So I can only imagine the total size of these toxic derivatives and how much havoc they're actually causing, especially as UBS has already paid hundreds of millions of dollars over Credit Suisse's Archegos failings. And that indicates to me there was likely other hedge funds that were also engaging in similar crimes, and Credit Suisse was helping all of them. This tweet I also found really interesting, saying that something broke at UBS, saying a UBS bond, which was due today to settle, was mysteriously deleted. It says participants are advised that NSCC, through its agent, has received notification from the underwriter that the following QSIPs on the above mentioned issue, originally scheduled for 22nd of November 2023, has been deleted. Now I don't know whether that's because the bond was actually settled and repaid, or if the can was just kicked once more. Because I then saw this tweet from Restructuring that talks about a UBS issuance, saying UBS issued a new $3.5 billion bond on November 8th. So why would you need to issue a new bond if UBS is actually fine and has tons and tons of money? Wouldn't they just repay the old bond and say, great, that's all that bond gone, we don't need to pay interest on it, we've got tons and tons of cash, so let's carry on? Why would they need to create a new bond and sell it as quick as possible? This is exactly what Silicon Valley Bank and Signature Bank were trying to do before their collapse. They tried to issue new bonds with no interest. They tried to sell new shares but with no interest as well, and as a result ended up collapsing. Now it does say there was interest for this UBS bond, I guess because many investors are completely oblivious to the fact that UBS could actually fail. To me, if UBS were really solid, they wouldn't need to be issuing new bonds in a banking crisis. They'd just carry on unscathed and show their strength. And what makes it even more worrying is that UBS actually snuck in a special clause, saying UBS has added a clause that the bonds will convert to equity instead of being written off during bankruptcy. Again, why would they need to add this clause if UBS was at no risk of going bankrupt? Unless, of course, they are at risk of going bankrupt, and investors would have never bought the bond unless that bond would convert to equity first. The UBS CEO then continued talking and also said that today, UBS, I promise, is one of the world's safest large institutions. But as VAR or Virtue at Risk tweeted, saying no, just one of the largest after gobbling up toxic positions from Credit Suisse for pennies on the dollar. I think it will be very interesting to see what happens to UBS over the next couple of months. Do they desperately start issuing new bonds after bond after bond after bond to try and raise more cash? Or do they start selling off portions of their business? Do they start trying to dish out and sell some of these toxic derivatives? But I guess who in their right mind would actually buy them? Or do they start selling off actual revenue generating portions of their business? Or are we going to experience another bank bankruptcy just like Credit Suisse, like First Republic, like Signature Bank, and like Silicon Valley Bank before that? And how many times are they going to try and kick the can of these toxic derivatives until every single bank turns around, puts their hand up and say, get away from me, I don't want any of that toxic rubbish? Also, in my video yesterday, I was talking about these hedge fund short sellers that sustained losses of approximately $43 billion due to the current rally. Now, when I saw this article, I thought that money had been lost over the last month, 2 months, 3 months, as the market had been rallying. But actually, these short sellers lost $43 billion over the last few days. Literally, in less than a week, short sellers lost $43 billion in the market. That is absolutely catastrophic, and I can't imagine if the market continues running, these short sellers could hold on for much longer. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.